Hello, everyone. Happy Sunday. This is Simon with AvaTrade. I want to welcome everyone to our webinars and, of course, the special welcome to new people. And for those of you that are new, just pay attention to the title. It pretty much says it all, your weekly trading plan. And I always say it, and I'll repeat it again, that planning your trading is very important. As some traders like to say, you plan your trade and then you trade your plan. And what it does really brings order into trading, and it's very important. So it takes away impulsive trading or unprepared trading and possibly improves the results. Of course, it doesn't promise anything. But in any area of your life, if you do plan and you stick to the plan, it just creates a more organized way of doing things. Few things about myself. This is me, Simon Friedman, Senior Account Manager with AvaTrade. I've been trading for almost 23 years. I started as a proprietary trader back in New York City, and I did it for about 11 years. And that was a full-time day trader, pretty much. And after that, I went into a more calm way of trading, and I started to mentor and educate other traders. And currently, I'm very happy that I'm able to assist our customers with their trading. This is the agenda of the webinar. We'll be talking about indices, stocks, commodities, and Forex, and that's the usual agenda for the webinar, and we'll stick to it. The channels, I highly recommend that you follow us. We post all the time new information that our customers can actually keep in touch with us, and definitely information on the markets and the events. You have Telegram, you have Twitter, and my favorite YouTube channel that is being updated on a daily basis. So you could subscribe and click on that bell so you'll be notified when new things are in. And most of the webinars, including this one, are being recorded and posted. So if you missed a live webinar, you can always get back to it by watching and listening to the recording. Risk warning, you can find the full statement at avatrades.com, and everything we'll do here is purely educational, as you understand. Now, before I go into commenting on this picture, it's a pretty cool picture, I think. So just a few things about what happened last week. We had pretty eventful week, and of course the highlight was the Fed's interest rate decision, and besides that we had two more decisions. So we had three altogether from US, UK, and Switzerland. All three increased the interest rate. And as I always say, that when the Feds are announcing the interest rate and the statement, that what's important that in this case is 30 minutes later, this press conference, where I always like to say that Powell is being really drilled with the questions. And I was listening to the whole press conference. I tried to do it as much as I can. This time I was free to do it. And I think the press conference didn't really work out because on one hand, there was nothing new there and investors didn't get any softness in what Powell had to say. He still said that we're sticking to the same actions and we use any tools that it's in our possession to bring that inflation to 2%. But more than that, there was a moment from which market really reacted in a negative way. Markets already spooked by a few banks suffering and almost getting out of business. Some of them actually are getting out of business. So there was a direct question about safety of funds, and it looks like he hesitated and he didn't really sound so reassuring. And I'm quoting, maybe not the exact quote saying, but he said that kind of that he's not going to say more than he already said. And his words were that the depositors could assume that the funds are going to be safe. So for me, it didn't sound like, okay, I'm 100% assured that my funds are going to be covered. So actually, after that statement, the market reacted really to the downside, and the sell-off started. So just my analysis on the press conference. Of course, some analysts commented on it, and you can find out probably if you heard the press conference or if you watched it, you could hear and feel similar idea. Okay, so back to the bubbles. It's funny they're using this picture from India. It says right here, Bank of America identifies the next bubble and says investors should sell stocks rather than buy them after the last rate hike. And you're welcome to read the article. It's at marketwatch.com. It's a fresh article, and I just took a few things out of it, so I'm going to read it to you, and this is direct from the article. It says the following: another bubble has emerged, courtesy of the bank sector crisis, which has already felled 3 U.S. regional banks. And it continues. Bank of America analysts led by Michael Hartnett say money market funds are the new hot asset. They point out that assets under management of money funds has now exceeded 5.1 trillion, up over 300 billion over the past 4 weeks. They also counted the biggest weekly flow to cash since March 2020. The biggest 6-week inflow to Treasury ever, and the largest weekly outflow from investment-grade bonds since October 2022. End of quote. So you're more than welcome to read the article and everything else that it says. So, I mean, a lot of analysts have been talking about this bubble, and they said that it's going to be another one. It could be even stronger or harder than 2008. And I mean, we're seeing these things. Banking system goes like a bubble in few cases, and everybody's trying to reassure us. That includes the head of Treasuries, Yellen. She's been saying the same thing. Powell was trying to reassure everyone. Europeans also doing the same since the Credit Suisse issue. So I'm sure we're going to see other things happening, and it's going to be interesting to watch how market reacts to it. So I just wanted to point this thing out to you. Okay. Before we move forward, I want to show the economic calendar and a few words to new people. Economic calendar is a public information. You can access it on our web trader or the app, or you can find any other suppliers of this information by just Googling economic calendar. What I do here on my webinars, I just take the high impact events or announcements. As you could see, there are many of them. You can filter them. You can see what's relevant to your trading. And as I always say, it's important to be aware of these things, because some of the announcements and the news are highly sensitive, and the market is being affected by it, and volatility increases. Something like interest rate decisions, something like non-farm payrolls, or other numbers that includes inflation numbers, they tend to affect the market in a strong way. So it's important to know when and what events are happening, so you could be prepared. Again, you might decide to stay away from trading. You might actually jump into trading, like some people like this super high volatility and they try to scalp in and out of instruments. It depends what you do. It depends on your risk tolerance and so on. But let's go ahead and just go through these things really quick. So we have a governor of Bank of England speaking on Monday, Tuesday retail sales from Australia, and the governor of Bank of Japan speaking. It could be his last speech. I think, if I remember correctly, April 8th, that's when the new governor is taking his position. So we have a couple of weeks, less than 2 weeks till that. We have, so of course, yen is going to be sensitive to what he has to say. Wednesday, CPI numbers from Australia. Thursday, CPI numbers from Germany. GDP numbers from US, important of course. Manufacturing PMI from China, very important. China is really being watched, what's been happening there economically and now also politically, since the head of China was visiting Russia in the past week. GDP numbers from UK, retail sales from Germany, and CPI numbers from European Union. So again, these are the high impact events. There are more of them. You can filter through them. You can put it in your calendar or put a mental note to it. Okay. So what we'll do now, we're going to move to the trading platform, and we'll try to go through certain instruments. So I just want to let you know what we'll be looking. We'll be looking through most of the indices. Then we'll look through a few stocks that includes banking stocks, then Facebook, Microsoft, Netflix, Tesla, Pfizer. Then we'll take a look at commodities that includes oil, natural gas, gold, silver, soft commodities. And later we'll follow up with Forex, starting with US dollar index. And we'll conclude the webinar with looking at Bitcoin and some developments in the area of other coins and in general of the industry. Okay, so let's start with indices. We'll actually start with China. Last week was a green week for China, since the past 2 weeks or prior to that was sell-off. On the daily chart, we are below all three moving averages. If you remember, the 13.5 was a strong level that was holding for a while. We were kind of going up and down that level, and then finally was sold, and now we're trying to slowly climb up. That's why the PMI numbers from China coming up this week are going to be very, very important. Okay, US indices. As I mentioned, we'll start with S&Ps. Wednesday was a sell-off, and that triggered, of course, with interest rate, and then press conference didn't really add any positive to it. And then Thursday and Friday, we actually had a little bit of recovery. So we kind of recovered just visually looking at this bar, recovered maybe 50% from the Wednesday's range. Okay, so let's see how this week will play out. Of course, the weekend, the analysts and the traders and investors digest what happened. They read the news. They try to analyze things and make a plan for the future. So we'll see how we start. Nevertheless, we actually closed on the highs on the US indices. So if you remember, I mentioned it sometimes, some traders like to use this strategy that if Friday closed higher than the closing on Thursday, then Monday, we might continue going higher and vice versa. So direction continues. NASDAQ, very strong. Wednesday sell-off was bought back on Thursday, and Friday we actually went higher. So I would be watching this level here from which we sold, and that was back February 2nd. The high here was 12,946 and a quarter. Let's just make this exact. 946 and a quarter. Okay, so as you could see, we tried to break through it on Wednesday and Thursday, and Friday we had an up day, again closing higher than Thursday. So if Monday the move to the upside continues, we'll be testing that level again. And let's take a look at Dow Jones. Dow Jones is the weakest out of three. It sold out on Wednesday. Thursday it bounced a little bit, and Friday also we moved to the upside. We are below all three moving averages, and it looks like a lot of consolidation happening here. So that's as far as US indices. Let's take a look at UK. This is not it. UK FTSE didn't really bounce. Wednesday sell-off, Thursday big sell-off, Friday a red day. So UK index is sitting right on 200 moving average. It didn't really have any buyers coming in towards the end of the week. DAX confirmed the kind of local support at around 14,948. Take a look. This was the last time we tried it before making the high. That was on January 19th. The low here was 14,960.5, and Friday we hit 956.5 by 4 points lower, but we moved higher. So it looks like we are building something here. There was a nice build up around here, which caused a break through the down of it, through the support, and then it looks like we are finding a new support around this level. Let's see how this week plays out for DAX. Similar idea here for the French index. Take a look on Friday. We tried and we actually didn't really touch that support. So that's similar. So European indices didn't really bounce, didn't follow that bounce on Thursday and Friday of US. Let's see how this week will play out. Again, just to remind you, there was interest rate decision from UK and Switzerland. Let's take a look at Indian Nifty 50. The weekly chart, it looks like we kind of bouncing from last week's support. Daily chart, it's clearly downtrend, didn't change yet, but we are kind of holding these recent levels here. So again, if you just summarize all the indices, China index looks get some positivity there. US indices after Wednesday's sell-off had 2 consecutive green days, and European indices are experiencing downside pressure. They didn't really follow US indices for those 2 days. Okay, let's move to stocks, and we'll start with bank stocks, as that's the news of the day, so to speak. As you could see, they tried to bounce, and the pressure is still there, even for Goldman Sachs, JP Morgan, all the major whales in banking industry are down. Bank of America, the one that is talking about the bubble, is being a bubble itself. So the pressure on the banks continues, and there was less deposits. I don't remember the numbers, I'm not going to quote it, but in the past weeks, the deposits are really shrinking. It looks like the people are not so secure, and I don't blame them, not feeling so secure about depositing into the banks. So let's see how that will affect the banks going forward. Okay, Facebook. Start with Facebook on Meta. Daily chart, we're really trying to fight this between 205 and 206 levels, trying to break to the upside, and we're having a hard time. On the weekly chart, it shows very clearly the high of the previous week was 205.61. The high here was 207.70. We were higher by about $2, but we closed only 35 cents higher than the previous week. So obviously, there's a pressure on this resistance here. Let's see if that attempt. I always say if there are too many attempts and the instrument is failing to move higher, that at some point the buyers get exhausted and the sellers get stronger and they push it lower. So if we are moving higher, definitely we could move. But if we're moving lower, we probably will be retesting definitely the 200 psychological level. And if going lower around 196, 197 area would probably present the support. But then again, depends what happens. Maybe we'll have a few more banks reporting issues and the market will will drop significantly. Anything can happen. Microsoft kind of confirming that the previous resistance at around $276 to $77, it kind of turning into support. We see some build up above this level. If it continues, we might see another leg to the upside. On the weekly chart, looks very nicely. And if we're, again, depends on the market condition, and if we dip below this level and start building resistance, we might continue lower. Another thing that catches attention, sometimes I mentioned this to you, the analysts using this crossing 50 moving average. In this case, it's about the 200 moving average. They call it golden cross. And if the opposite happens, let's see if we can catch it like here. When the 50 moving average goes below, they call it dead cross, where the trend changes to the downside. So it looks like in the past few days, we just had this golden cross, which technically speaking, it triggers the investors and traders to the buy side in this case. So it'll be interesting to watch. Technically, it looks good. It looks like it's building its support above this previous resistance line. So we might continue to the upside here. Again, depends what market is doing. In general, as I always say, in a falling or hard falling market, even the best stocks are going to get sucked in. And let's move on. Netflix had a huge move. Somebody got really squeezed from the shorts. The two moves to the upside, and some analysts are saying that the new policy on Netflix, that they're trying to change those things, that people could use multiple signings with the same password, and they're trying to change it. They started with Canada. They're going to start UK soon. So a lot of analysts are predicting actually good results for the first quarter for Netflix, and those news triggered, and it looks like short squeeze worked out as well, because the stock opened with the gap and went higher, and another gap the following day. So it's a huge move to the upside, and let's see if that's sustainable. That's Netflix. Tesla. Tesla tried to break above the $200 again, but it's having a hard time breaking it. The few things they actually lifted, I think Moody's lift. I don't know if I mentioned last week. I'm already a little bit confused on that, but I think Moody's removed or upgraded it from junk, the bonds of Tesla, and I think that was right here on the 21st when the stock reacted to it, and we went as high as 197.82, and I think the following day we touched 200 briefly, and then we dipped again. So the 200 remains kind of a level that Tesla could not close above yet. So let's see if the attempts continue. Meanwhile, we have the 50 moving average crossing about the 100, and it looks like we're trying to push through that between 195 and 200 levels. Okay, so Pfizer, I just want to take a look at Pfizer. If you remember, we said that it might move higher, and some analysts thinking that the price is very attractive here. So we had 1 week in green and the second week in green. And on the daily chart, if you look into it, it looks like we have a little bit of a build up here. So let's try to figure it out. So we stopped here on this recent sell-off. So the low here was 39.76. Then we went below. The impulse didn't follow. There was no sell-off. The opposite happened. We came right above, and we didn't touch that level again. So that's a strong sign. So we do have a clear support around 39.76. And in order for Pfizer to start moving higher, we first need to break this March 20th high, which was 40.81. And if that happens, that this level, 41.21, would be the next test, and we could be moving higher from here. Let's see, it's worth watching. Okay, so that's it with the stocks. We'll move to commodities, and we'll start with oil. Oil had a hard time breaking through 70. We had few attempts with pretty much huge tails. Okay, maybe not huge, but pretty big tails. We reached here as high as 71.65, and we couldn't hold even above 70. Close lower. So 3 consecutive days we tried to kind of run above 70. We couldn't. Friday was a sell-off and a little bit of recovery there. So oil is having a lot of pressure to the downside. Again, some analysts are saying if these issues with bank continues and recession and other things are continuing, so oil has actually ability to fall to about $40 per barrel. And that's fundamentally some analysts' opinion, but nevertheless, this 70 level that was established right here, we had the support hitting on December 9, 2022, and there was 70.09, and recently it became the resistance the moment it broke below it, and there was a lot of attempts to go higher, but we're still having a hard time breaking 70. So, like I said, eventually they might decide to take it lower. As there was a huge accumulation in this channel within $10, as you could see here, for a few weeks. From beginning of December of last year till now, we were sitting in this $10 range, and then the previous week we broke through it and we're sitting below. So we'll be watching oil. Our favorite natural gas has been super weak. If you remember the story that we've been following, that we had a tight channel here. We broke below, we broke above, we retested $3. Then we tried to hold above the channel. We couldn't. We entered the channel again. And in the past week, we really traded below the channel. And let's see what's next here. As of now, the recent low was $2.11, and we were about 2 cents higher than that on Thursday, and Friday we had the green day. Again, natural gas is a very tricky one. It can easily have a nice and crazy move either way. So if we break through it, we can have a fake breakout like here, or breakdown, and then move higher, or we can just continue tanking, or we can just have a huge unexpected move to the upside, like we had here. That's why trading natural gas could be tricky, like any commodity. There's a lot of unknown, and there's still a war going on, so geopolitics playing a big role in it. The weather, the winter is finishing, and everything else. Since the war, everything changed as far as the gas supply and everything else. So we don't really know what exactly is happening behind the scenes. So natural gas, again, the 211 support is holding as of now, and what will happen will be very interesting to watch. And let's take a look at 2 stocks with oil. They've been really low. Chevron and Exxon have been to the downside. Now, copper had a nice run with China recovering a little bit, and Friday was moved down. We are above all the 3 moving averages, so we'll be watching China, definitely watching in general the equity markets, and see what copper will be doing. Nice move, consecutive 7 days to the upside, and Friday a little bit of a profit taking. Let's move to gold. Gold, of course, as we said, looks like it start playing a safe haven role as the market had a little sell-off. Gold had a nice run to the upside. We touched 2,000 few times. I don't think we closed about it Yeah, we did. No, we didn't manage to close above the 2,000. We had a nice move here on the 20th. We went as high as 2009.69. Then we sold. So the 2,000 psychological level, we didn't really close about it yet. Friday was a little sell-off. Silver in a very interesting situation here. I'll explain why. I like to look to the left and see the dynamics of the market. So let's take a look. This big move on silver happened back in November, the end of November, and the move kind of stopped right at this level here. The high was 23.26, like $23 and a quarter. Then we played around that level a lot. Take a look. We sold again on the big sell-off. The very next day, we erased the 3 days of the events. We came back above, we were back below. Then we were holding that level for a while. Then we broke below it again on February 3rd with a sell-off that created a lower low from the previous support. And then we had a nice run together with gold to the upside. And it looks like we are rejecting this 23.26 levels. Okay, so if we are having a hard time in the upcoming week to break above and start building support, there's a possibility of silver moving lower here and looking for some kind of support later on. It could even move all the way to here. Or the opposite could happen. If we do manage to break to the upside and start building support above the 23 and a quarter, we might actually challenge the previous highs. And on the weekly chart, it could easily happen when the 2 consecutive weeks, and the next level, it's around 24.5, 24.58, from which we sold. So silver, that's why I mentioned silver is in a very interesting strategic situation here. So we'll be watching that in the upcoming week. Soft commodities, they've been weak, but Friday they just stood up, especially wheat and wheat and corn. Let's take a look. Take a look at this. There was a sell-off 4 days, and Friday we just stood up. And let's see if this move continues. Corn, similar idea. It didn't really sell off, but it's been kind of moving up and down. And then Friday, a nice big candle to the upside. Soybeans didn't follow with the huge move to the upside, but also green day. So we'll be watching the softies on the possible continuation on recovering mode to the upside. And the last one is the cocoa. Also similar to silver, strategic level here, 28.50. And here's why. We had to move all the way to here, and then we made a lower low from the previous one, and then we bounced straight back. And the moment we broke through it, the impulse didn't really follow. It was a move up, but then we came right back, and we are kind of sticking to this 28.50 level. So it could be that we confirmed the support and we continue higher from here, or we might be testing this level again and eventually might dip below it and start building the resistance. That's why 28.50, it's a very serious level here as far as the recent moves. Okay, and just to remind you, we are above these 2 attempts to go high. This was the high that we reached in 2020 in November, 28.18. Then we made a high here. We made as high as 28.34, but we did close below. And then we tried again on this week. That was the week of 26th of February. It was a failed attempt that just triggered a lot of stops possibly. And then take a look at this week. This week was one of the strongest moves, of course, besides this one here, and we closed almost at the highs. So, of course, 2 scenarios. We closed finally above these resistances, and if we do continue higher, so our next level of retest would be 29.23. Let's mark it 29.23. Everything is possible. Okay, so if we do continue higher straight here, so 29.23 could be the next retest. And again, if we dip below 28.50, we might slide lower over here. But as of now, it's a clear, strong uptrend. As you could see, we're making higher highs and higher lows, and we are above the previous weekly resistances here. Okay, and on the way to these two. Okay, so that's as far as commodities. Let's move to Forex, and we start as usually with dollar index. Dollar index, it's been to the weak side since we made highs back in September. We went straight down to 101.5. Then we had a recovery here. So 105 became confirmed resistance, and it looks like 101.5 around there. It's a support. So we are in the channel here. What happened? This is the weekly chart. On the daily charts, you could see we had a strong support here at 101.43. Then we moved, like I said, on weekly chart, we moved to 105. We failed to go higher, came straight back, came to retest it, and Wednesday was a move down, but then Thursday and Friday we moved higher. So we're trying to enter into 103 level. Let's see if this week will succeed. And again, it's sensitive, first of all, to the interest rate increases, and the whole move on dollar happened since the Fed started the interest rate increases. So together with that, if you take a look at all the majors, they just did the opposite, of course. Thursday and Friday, euro sold against the dollar, pound sold against the dollar, Australian dollar and New Zealand dollar did the same. So we'll be watching dollar, how it acts next. So again, it's really having a hard time breaking about 103, and it looks like the pressure is building up. At the same time, the Feds made an increase, so it reacted to the upside a little bit, but that move was limited. As far as the specific pairs, I have two pairs that I prepared. One was Euro Australian dollar. We talked about it in the previous 2 weeks. We are still challenging this level here, 162.24, and we keep on hitting that level. The last 3 days we tried to break to the upside again, and looks like we're having a hard time. So that resistance still holding. If you remember last week, I mentioned to you that it was a nice scenario to the downside. We came right back to hitting that level. We might be repeating the same move. And the next one is CAD JPY. If I find it, just give me a second. CAD JPY, okay, and that's the opposite scenario. It looks like it's really finding support around these levels. And take a look. This was a strong sell-off. We stopped a strong bleeding around here at 95.07 to be precise. And then we start building support, and we made the higher high from the previous one, and then we slid all the way back to the same level. Friday, we had the spike below it, but closed right on it. So to close here was 95. So 95, we'll be watching this week. If we all continue building support here, we might see a bounce to the upside. Let's take a look how weekly chart looks. On the weekly chart, it's even clearer. Take a look. By the move up, we sold. We made move to the upside. That was we're still technically in a downtrend here, and if this move holds here, we're going to try to maybe break through this sell-off mode and go higher. And if the opposite happens, if we start building resistance below the 95 level, we might see continuation to the downside. We are below 100 moving average again. So if that sell-off happens, we might come to the 200 moving average, or before that, we would be challenging the support around 89.70 level. Okay, so these two pairs specifically we'll be watching. Again, it's Euro Aussie and CAD JPY. And the last thing that we'll be talking about today is the famous Bitcoin. And you probably heard that Coinbase stock fell last week, and it looks like SEC is digging into their practice trading and everything else. And if you remember, a few times I mentioned that with these FTX issues and other coin or crypto issues, the regulations and strict actions of the regulators are about to happen. So this is the beginning. The SEC, which is Securities and Exchange Commissions, they are starting with Coinbase, and the stock fell, like I said, and we'll probably hear more developments and more things, maybe more findings or more issues in that area. Meantime, Bitcoin reacted to it on Thursday and Friday. We had a nice run, if you remember, from 20 all the way to 28, almost 29,000, and it clearly was building resistance around 28,000, and that Thursday fell off, followed by Friday red day as well. So let's see how things develop in the upcoming week. Okay, so just to put it all together, we have Feds keeping the same course with the fighting of the inflation. We have pressure on the banks that continues, and unfortunately will be, or maybe, okay, I can say we will be, but we might be seeing new banks with issues. Again, Bank of America, the article that I presented to you say that we are facing bubble and investors should not buy stocks. And we'll see what happens. We have a few announcements this week. We have SEC digging into crypto world, and it's going to be an interesting week, and that's for sure. So I want to wish everyone a nice weekend, whatever is left of it, and get some rest, get some energy, have an amazing and successful upcoming week, and we should be back next Sunday. All the best. Take care.